came exactly to talk about lending, so I think we have already a TLDR. But my slides or my information starts with traditional art. That's one of the biggest things that we have been tackling in Zharta in the last 2 years. So I don't know if you are aware, but traditional art is a very big segment for lending. Just to give you the ballpark, $25 billion is more or less what is being in the market as today by Sotheby's estimations from last year. So people that hold pieces of art are very sophisticated. They use these kind of assets to ask for loans. And the reasons why they do this is, one, if you have a piece of art and you are preserving your asset. So it's something that you are trying to fight inflation, you are keeping something that is an art asset that is unique, that cannot be diluted. And so this is very relevant, and that's one of the reasons why wealthy people buy art. We like to think that the majority of buying art is only cultural, but it's not. It's also a very big financial tooling. And so wealthy people take art as a way for them to preserve their wealth, and then they can also take loans against this art. And this is very, very interesting because they can have liquidity out of the blue. It's the same as we were picking up the house mortgage as an example. That's the most traditional for the average Joe, for normal people, is you have a house, you make a loan against that house to buy a house. That's kind of the baseline of the majority of people that start growing in their lives, and they do that action. But you can also not only take the loan to buy a house, you can take a mortgage against something that you have. If you have a house already, or if the value of the house goes up, you can take lending, and you can take more value of that house, and you can invest in other things. And this is a very interesting point. And so people in the traditional art do this a lot. Let's see if I have slides already. No. So people that collect art do this a lot. And they do this to have liquidity out of the blue, to preserve assets, and also to better do tax planning. So when you sell an asset, typically you pay an interest rate, you pay a tax because of sales. So typically in Portugal, when you sell an asset, you pay more or less 28%. That's on capital gains. And so when you are taking a loan against an asset, typically there is no interest rate, there is no tax on loans. And so this is a very efficient and powerful tool for people that understand this, because they basically have access to liquidity, they pay an interest rate that is way smaller than the tax that they would have to pay. And at the same time, if the asset is going up in value, they are preserving and they have access to more capital in the future. And so traditional world does this, takes almost 30 days to get a loan in Sotheby's against a piece of art. And this is for pieces that they already know. So you have a painting, you go to Sotheby's, you buy. Out of the gate, they give you, if you buy something above $1 million, that unfortunately is not my case. I never bought nothing above $1 million because I can't, but I would love to. But I know that this is done for people that acquire. They get the loan straight out of the gate there. And they take 30 days to give a loan on an asset that they know. So they have already done due diligence. They already know the painting or the sculpture or the luxury item, whatever. And they take 30 days to give this loan, which is a huge amount of time. And so we are in a new ecosystem. Blockchain kind of disrupts everything on this. Because just to give you the time frames, 30 years is more or less the time that people hold pieces of art. So that's more for traditional art players. 30 days is on traditional art to get a loan. On the blockchain space, you can get a loan in 30 seconds. And this is kind of mind-blowing. How can we go from 30 seconds to 30 days in the best use case scenario that you have? And the reason for that is traditional art has the problem of provenance, the problem of certification of a piece of art. You have no idea if that Monet, if that Picasso is really a Picasso. You need to call a guy that knows a guy, that knows a guy, that is the guy that comes and goes and do the evaluation. And then you have to trust that the evaluation is real. And the amount of scams that exist on this space are very high. Then you have bureaucracy regarding geography. The piece is old in Portugal, or it's old in the UK or in the US, or maybe it's not even in a country, it's on a free area zone. Then you have, how is the piece being conserved? You have a piece of art that is properly managed, is like inside of a place where the temperature is right, the humidity is right. All of these problems happen. And blockchain kind of cuts everything on the root by this. So, thank you so much. Maybe I can go and so we are on a complete new ecosystem. 30 seconds to get a loan using blockchain as a baseline. And so when you have a wallet with assets, maybe you don't have any liquidity, but you have lots of art inside of your wallet. NFTs are one of the prime use cases for digital art. You have the opportunity to take loans using those NFTs as collaterals. The advantages are clear. The assets are certified by definition, so it's impossible to forge an NFT, which is fantastic, the same way that it's impossible to forge a Bitcoin. So these are kind of by inheritance, you have exactly the same properties. You can transact these assets between wallets very easily. You can use smart contracts to automate all the lending operations. And so going a bit deeper to what you can do and what are the kind of loans that you can do with DeFi on NFTs. So there are typically two types of loans. I don't know if you are very familiar with the space or not, but for traditional RC20s, fungible tokens, there was the concept of Aave, the concept of creating loans that are perpetual, that operate with a bonding curve where you can provide some of your crypto as a collateral and you get a loan out of that. And that loan doesn't have to be repaid until the user wants to repay, or if there is a stiff valuation change and then the asset gets liquidated. And so for the NFT world, we have that kind of lending. A user can come, deposit the NFT inside of a smart contract. There is a price tag of that asset that's being monitored all the time. And then, if there is a valuation on the price, the user can be liquidated or he has to repay his loan very quickly. At the same time, there is advantage on that. Maybe he has a perpetual loan forever, and this is fantastic on a sense. And then you have also the type of loans that we do on Zharta, maturity loans, that are a bit more designed for this kind of use cases like art, like real estate. That is, when you have a house, you get a loan from the bank, you are not expecting that the person from the bank just knocks on your door and say, hey, you have been liquidated because the price on this area dropped 50% and now you have to repay your loan. No, that doesn't happen. Like normal people need normal solutions. They get a loan for 30 years so that they can pre-plan their lives for that. And so we created exactly the same thing. So the users can take an NFT, put inside of a smart contract, specify a specific due date when they are going to get repaid, and until then there is no liquidation whatsoever. All of this operation takes less than 1 minute. Then we have, the majority of my talk is about art. You have two types of art in the NFT world. You have collections that are very similar, where the majority of the pieces follow a specific trend, they have a specific price. Then you have some assets that are a bit better, they have a premium. And then you have assets that are completely different. They are unique by definition, and they need proper different valuation. So the way that we enable loans on floor assets or assets, we query all the data around that class of assets. We get the price points of sales of the last 2 years. We get all the information, and we are able to give an appraisal on that asset. Then we are able to give an underwriting system, and people can take a loan in real time. We also have one-of-one loans where you need kind of a similar process to Sotheby's. You need an appraisal, someone that deeply understands the art, but the difference is then on the process. Once the asset is evaluated, once the price tag is defined, once the underwriting is done, that takes a few days just for someone that is specialized, all the process and operation can take less than 30 seconds or 1 minute. And then we go to interest rates. Interest rates are very, very relevant on this world of finance that blockchain, per definition, has on all of that impact. The interest rates can be through APRs or just APR. And so when we take into consideration through APR, it's a bit like TIG and TAG, where you have like one thing is the cost of the loan, the interest rate that you have to pay, but then lots of loans have can take collateral can take origination fees, or they can have other fees that should be accounted. So by taking that into consideration, it's very relevant in the perspective of an investor and on a borrower to understand what kind of deals they are doing, so that to understand if the future is bright for the investment that they are taking. Going a bit into our use case, we give loans on Zharta. That's kind of what we do. It's we have two products. We help people to do loans with our non-custodial solution, and we also do renting. But going a bit deeper into our use case of lending, users can come to our platform. They connect a wallet. We evaluate in real time the assets that are inside of the wallet. So this is kind of instantaneous process. They connect the wallet, automatically they get the quotes for each asset. Then they are faced with three options. They can select a degen loan, a normie loan, or a farmer loan. So this is these definitions are based in time. So they have like loans of 7 days, 30 days, or 90 days, where they can take up to 70% of LTV. What's LTV? It's the amount of the value that you are taking as a loan versus divided by the full collateral that you are pledging. And so is very interesting if you think. You can take 75% of an asset price for 7 days and you pay 35% interest rate. I know that this seems a bit high in interest rate, but it's a very volatile ecosystem. So you need to account that on risk level. And also people that do this kind of operations typically are doing big profits because they are specifying for specific strategies that they already know and that pay premiums way higher than what they are taking as a loan. We provided in the last 2 years more than $20 million in loans, and we are one of the market leaders in Fidenza loans. Fidenza is a very specific type of art that is generative, and we have wielded the record of the biggest loan against the Fidenza. This is a $500,000 loan that we provided of 90 days. We didn't provide this, so we work as a peer-to-pool system. So people syndicate funds inside of a pool, and then the pool is used to provide the loans. So we are a non-custodial solution, and we help to settle and to automate all the process. But the liquidity to provide the loans come from different lenders, and we operate on a fully decentralized way. Also, on the case of more unique loans, we provided $1 million loan against squiggles. I know that these blurry lines are a bit strange, but this is one of the most interesting pieces of art that kind of that kick-started the generative art ecosystem, and we provided a loan of $1 million to Squiggle DAO. And so this was a very, you see how disruptive all of this is. We provided a loan, not using a bank, not using private credit, using a fully automated smart contract on a non-custodial way to a DAO that is a structure that is governed by DAO members. So it's the future. So we have organizations that can create their own treasuries, invest in their own projects, create fully new organizations. They use their treasury to finance their operations. We provide a loan using a non-custodial solution, and all this ecosystem, this loan took, after the appraisal, it took less than 1 minute to get settled. So this is very, very, very disruptive in a sense. And Zharta, as I said, so we provide peer-to-pool system. So we are very borrower-friendly. That's one of our takes, is that this is a space that needs some education. We need people that want to receive loans and take loans using their assets as collaterals. This is sometimes a bit sophisticated. So we try to create a user experience that is very craft and tailored for borrowers so that they can take loans with ease. Very customized, and also we have liquidation protection. So during the term of a loan, 90 days, you never get liquidated. For example, in the Skrill case, the loan was for 1 year. The liquidity to provide that came from private investors that done their own underwriting, and so we helped brokering all that deal, and then the deal was settled in Zharta. But so we are seeing now already loans of 2 years being done in this space. This is a very interesting ecosystem. I think more than $1.5 billion was done in lending operations in the last 2 years, and it's a space that we believe that's growing, and that will grow a lot in the next years. And the funny part is that we built all this infrastructure just for art. It was kind of our use case in the beginning, but now we are already being contacted by traditional finance players, banks, etc., that want to use these kind of infrastructures for houses, for things that they already do with their own operations, and they want to go into DeFi, loans against watches. And so majority of use cases is surging based on this. And so we have been focused a lot in creating a responsible solution for this DeFi ecosystem, and we received the Bank of Portugal and CMVM FinTech Prize of the Year 2 years ago through FinLab. And so